Hi everyone, this is Jitendra Kumar Gupta. Today I am going to talk about Mishra Dhatu Nigam, which is known as Midhani as an investment idea. Let's briefly understand the key investment arguments and why we like this stock at this point in time. First and foremost, it enjoys the huge competitive advantages in the market. If you look at the company is a dominant player in the specialized steel, which is used in applications like aerospace, defense, space, and high-end engineering, oil and gas like submarines, etc. To give you some perspective, unlike the traditional steel, which traditional steel products which are sold at about 30 to 40,000 rupees a ton, Midhani's product fetch realizations of almost 40 to 50 lakh rupees a ton. It's a highly specialized business, thus the company enjoys huge entry barriers. Second, it is catering to a growing segments such as defense and space. If you look at the government has increased expenditure for the Indian space program and high-end engineering like defense, which would be key growth drivers for Midhani's going forward. For instance, if you look at since fiscal 2015, the government's budgetary allocation for ISRO, Indian Space Organization, has more than doubled to about rupees 12,473 crore for the fiscal 2020. And it is growing. Moreover, if you look at indigenization of the Indian space procurements and India's growing aspirations to emerge as independent country in the space establishment, would open up more space for the companies like Midhani. Third, the company has a strong revenue visibility led by orders in hand. The company's order book has jumped by almost fourfold in the last 2 years. It is currently sitting on an order book of about 1,850 crore. The current order book is about 2.6 times its fiscal 2019 revenue, and that provides a very good revenue visibility, particularly considering that these are relatively short cycle orders, and Midhani has already seen some traction as a result of the strong order book. If you look at, the company has seen a good pickup in execution and deliveries. For instance, in the September quarter 2019, the company's revenue grew by almost 48% on a year-on-year basis. And if you look at for the first half of the fiscal 2020, revenue recorded almost 37% year-on-year growth. Four, it's a unique play and it's a profitable business. In fiscal 2016, the space segment was about 5% of the total revenue of the company, which has moved up to almost 55% in the first half of the current fiscal 2020. In this period, if you look at the EBITDA margins of the company, have moved up from 21% to 31% currently. Moreover, business generates a lot of free cash, and which provides a huge balance sheet strength and scope for distribution. Between fiscal 2015 and 19, the company has generated close to 700 crore of cash profit. About 200 crore is still sitting in the books, and part of this is being invested in the business. By the end of September 2019, if you look at it reported over 300 crore of capital work in progress on a gross block of about 440 crore. This change in capital allocation towards the more remunerative activity will help the company grow higher and improve its return ratios. Fifth, the most important point is that it is trading at reasonable valuation. If you look at in terms of valuation, it is currently trading at about 15 to 16 times its FY21 estimated earnings, and it is currently, it is offering a dividend yield of close to 2%. The stock has seen some spike over the last two trading sessions. Even at around current levels of 168, its market capitalization is about 3,174 crore, and I think it is at current market price, it is reasonably valued, considering the fact the company earns a superior return ratios. It is growing at reasonably well, its earnings are growing reasonably well. So that's all from my side. For more news and views, please log on to moneycontrol.com.